Bitcoin continues to show upside potential as issuers work to refile, or actually even scramble to refile, their Bitcoin ETF applications. Joining us now to discuss is Coinbase Institutional Head of Research, David Duong. Welcome back, David.
Thanks for having me on.
I'm glad to see you again. So I kind of want to get your thoughts first here. Wall Street Journal reporting that the SEC's current that the SEC is saying that the current Bitcoin ETF filings were inadequate. What are you hearing from institutional investors right now?
So, I mean, this happened. I was actually just on a market roadshow in Europe and talking about this. And I think that the reaction has so far been mixed. I think a lot of people recognize that it's important to have these ETF filings, particularly since, we already have a lot of these offshore or non-US, I should say, ETFs. But the issue is they oftentimes, depending on the jurisdiction, are perhaps less liquid. They may be more expensive. They're definitely not as accessible as what I think a potential spot ETF in the US could actually represent. So I think there is a lot of people who feel encouraged by this, and the names coming out here obviously are very strong. But I don't think so far, and this is kind of reflected in the price, that just because we get this kind of one stumbling block kind of from the SEC, that things are over. This was kind of par for the course, that this was not going to be an easy path.
You talk about this, the difference in institutional interest between overseas, and by overseas you mean over Lake Ontario, because we do have an ETF right now in Ontario, in Canada, this spot ETF, and yet it doesn't seem to have the sort of same legs that one would have expected. Is it because it's in Canada, or is there any? I mean, have we maxed out on the possibility, or just about? Are we putting too much hope in a U.S. ETF?
Well, I don't think so, because I think, the way large asset managers in the U.S. kind of work, oftentimes, they use a bunch of these ETFs to varying degrees in order to kind of specialize. They have specific investment strategies that they're trying to impose. Some are very focused on, if we just kind of broaden out from crypto markets, like, bond markets, credits, equities, et cetera. But, I would say that we need kind of just the anchor here. And I'm not saying that some of the existing ETFs just don't provide that, but I think that you need to see some of the complexities that are often incumbent inside of US-based ETFs that allow these money managers to actually combine and kind of use those kind of products to implement these strategies.
Do you think the timing is surprising given the SEC's lawsuits against Binance and Coinbase?
The timing of BlackRock coming out with a filing. I mean, not just BlackRock, of course, like multiple people. It was just on the screen. But I think it was certainly a surprise that this came out at the time it has. I think it sends a very strong signal, which is how the market received it, that, even with these kind of cases pending from the SEC, that institutional adoption actually looks cleaner. And I will say that, I spoke to a friend of mine, TradFi person, who just isn't involved in crypto at all. And basically, he was saying that, this was the time he thinks to actually be invested in crypto. And I kind of asked, like, well, why do you think that? Like, well, what is it about this moment, given that you're hearing about, SEC against Binance, SEC against this Coinbase? And he's like, well, this is just how sausage gets made. Like, at the end of all things, like, I do think that this is regulatory clarity in the forming. Like, this is how it's going to get done. So he thinks that now is the opportunity to actually get in here and perhaps try to start looking for some opportunities in the crypto space.
Given that, what's your outlook on Bitcoin for the second part of the year?
So I think I said it last time on the show. I am constructive on Bitcoin into the second half of the year. I still haven't given up on the idea that we're in a tough kind of upcoming period. I think a lot of people, if you look at stock prices, you look at other risk assets, it seems pretty optimistic. I think a lot of people aren't as concerned about a hard landing scenario as they were previously. I'm not so sure, frankly. I still do think that the probability of a recession. It's probably two-tiered about what's going on in the US as well as Europe, but I do think that something could still materialize, and I'm not fully convinced that we've solved all the problems here that would negate that. For example, the credit crunch environment that we're currently in, for example. I do believe that, the Fed would be making a mistake, for example, if they started to hike rates in July with another 25 bips. But that being said, I think by the time we get into the fourth quarter of this year, probably the outlook's going to be a lot better. I think very likely disinflation will be in full force. The Fed will probably be cutting rates at that point. We'll be thinking about the Bitcoin halving in 2024, and a lot of the sell pressure from some of the technical aspects of the supply-demand situation will have been resolved.
You couched it in negative terms, but it seems very bullish because right now it looks like the Fed is going to most likely raise rates. I mean, the market has priced it that it's going to raise rates 25 basis points. And Powell has repeatedly, and not just Powell, but everyone else repeatedly said, we're going to keep going. There's no stopping us. We're going to keep going until we see the number we want to see on core inflation, that we want to see on the producers' price index and everything else. We're not happy with the way inflation is going, and rates are going to keep going up. It seems as if the equity markets and the bond markets and now the crypto markets, they're not taking that seriously. How come that's not a big mistake?
So there are a few things. Number one, I think if you look at what happened last week, so the ECB had its annual meeting, very much akin to Jackson Hole in the US, for example. Powell was there. We saw Andrew Bailey, Ueda, Lagarde, and they came out very hawkish, with a mild exception of Ueda, who is still on pause with the idea of switching from yield curve control. But I think it was interesting to see two things. Number one, the transmission of policy, which was kind of a missed point by a lot of people. There's definitely a two-tier system where it's actually happening a lot faster in the US than it is in Europe. And number two, I think immediately after those meetings, you saw a rejection of what happened with the ECB, where they hiked rates by 50 basis points. At the time, people said, okay, that's necessary to contain inflation. But subsequently, it showed that a lot of policymakers recognize that there's a concern about how negative this could actually be for the economy. So I think it's getting the ECB to think twice, and I think that it's probably going to get the Fed to think twice as well.
David, we're going to have to leave it there. Thanks so much for joining us this morning.
Absolutely. Thank you very much.
That was Coinbase Institutional Head of Research, David Duong.